Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some charts today, and the first one I'd like to look at is the euro against the dollar. If we look at this, we can see a continuation yesterday of the breakout higher from the diamond pattern of Tuesday's trepidation on whether this was a false break or not were put on to one side. That was all put on one side. The market opened on the short stroke medium moving average, currently 109.18, and after the briefest of tests lower, moved higher. The market punched through and closed over late March to date downtrend, currently at 109.45, the 50% Fibonacci line for the whole of 2020 at 109.62, and the medium moving average, currently at 109.64. In the end, it only halted of one of the two behemoths still overhead, and that's the long moving average, currently at 110.13. Today, it has dropped down to the previous supports, presumably to gather ammunition for an attempt on the long moving average. If not, then this whole diamond pattern that's been so integral to 2020's action will become redundant. Watch this space. The next chart to look at is cable, aka sterling against the US dollar. An indecisive doji cross yesterday. So I'm not surprised at this, despite the good bullish piercing line pattern on Monday and a subsequent follow-on higher. What the market came up to test, the big 50% Fibonacci line for 123.04 for the whole of the March move, it became clear that at the very least it could cause a hesitation. Add to that the rapidly descending tandem of the short stroke medium moving average at 123.17 and the short moving average currently 123.34, and you have some significant bearish pressure all told. Today, we're steady to a little weaker, and it again brings the idea of a possible April to May base double top. There are two levels to look out for should we follow on that way. First target X is in the initial potential for the recent ascending triangle on the downside, and that's at 119.60. The second is the potential double top target X1 in the 118.50 area. However, there's still quite a way to go on the downside should the market choose to move that way, and we'd have to fracture the very recent 50% Fibonacci line at 120.24 to get there. Next one to look at is euro against sterling. A seeming countering bullish pattern yesterday to the previous session's bearish engulfing pattern. Now, I have a theory. Yesterday was a wannabe bullish engulfing pattern, maybe even a wannabe key reversal up. The reason why it didn't show up as such is that just below the market was the key significant 2020 50% Fibonacci line at 88.90. And it was this support that did not allow the market to fully form on the downside, either of those two bullish patterns I've suggested. It, of course, is only a theory, but it fits the information we have, and it also explains today's move higher, which, by the way, has achieved target X on the upside for the recent sideways pennant in the 89.80 area. Enough said. Looking ahead, the action from mid-March today is now looking for a rounded bottom with a failed spike around the week of the 20th of April. I'm not telling you what it looks like. I'll leave that to your imagination. This will now be the subject of my further future commentaries. Next chart to look at is the US dollar against the Indian rupee. Simple pattern yesterday, a key reversal down, but with a nice build up to it. This comes after the prior session's indecisive spinning top that managed to open and close just below the key recent 50% Fibonacci line at 75.68. It was supported by the short stroke medium moving average at 75.62. Yesterday, we closed below that as well, and today we've opened below it, and after a brief try higher, seem now to be extending the move lower. This all comes as a result of last Monday's bearish dark cloud cover pattern. Just a word of caution, we're still within the range of last Tuesday's, that's a week ago, big key reversal down, that failed. Finally, overall, even this recent action still ties in with the idea I've mentioned 2 weeks ago of the moves from March to date increasingly looking like an inverted ascending scallop pattern. The final chart I'd like to look at is the US dollar against the Brazilian real. A bearish engulfing pattern yesterday, but still there. Once again, and again, interestingly and surprisingly, the short moving average, currently 568.44, has helped support the market. This time it was on a closing basis, so that the main body of the day was still above it. The thing to look for now is below this short moving average, and that's the early April to date uptrend, currently at 561.46. It is only a two-pointer, so it really hasn't that much provenance. I continue to have a suspicion about this market. I am not sure quite why yet, other than my decades of seeing such markets, but I suspect that there may be some volatile action possible. Watch carefully. That about wraps it up. So stay safe in the markets and in real life.